All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to be covering NGL. All right. That is our ticker symbol of the day. This is a viewer request. I'm a man of the people, and I've gotten a few requests to now cover NGL. And it's no surprise after the massive rally that the stock has been on and headlines such as these, right? We're seeing really bullish headlines on the stock. Nancy Pelosi is also in on the stock as well. So be sure to smash that like button, subscribe to the channel. In today's video, we're actually going to go over a very detailed technical analysis on the stock. We're going to go over some of the key areas of liquidity and the possible Elliott wave structure. Now, this may look complicated. I'll break these things down to you guys very simply. First, going over the areas of liquidity. We're also going to use today's sponsor, Simply Wall Street, to dive into the fundamentals, okay? The fundamentals of the stock. Now, Simply Wall Street is a really great platform that does fundamental analysis for you, and it also gives you some very nice graphs and charts that are really nice and colorful, makes it very simple and easy to use and understand. They have a great app and also a great website. There's a link in the description below. All right. In a pinned comment down below, you guys can get up to 40% off on your purchase of Simply Wall Street for the first 100 people. And you get a 14-day free trial. So you can look up any stock you want. Maybe there's some stock that's trending right now, or maybe there's a stock that you've been really interested in and you want to see if it's a good value. Simply Wall Street's a great platform I've used for a while. I'm glad to have them as a sponsor. Now, when you first go into the overview, okay, NLG Energy Partners engages in the transportation, storage, blending, and marketing of crude oil, natural gas liquids, refined products, renewables, and water solutions. It's currently trading at 79.8% below the estimate of its fair value, and it's also trading at a good value compared to peers and industries. So, that's going to be some of the rewards. Now, from a risk analysis perspective, the earnings are forecast to decline by an average of 22.2% per year for the next 3 years. Right now, when you're seeing whopping massive returns of 156% over the last year and 7-day returns of 6.3%, I can definitely see why a lot of people are interested in this stock. So let's dive a little bit deeper. When we look at the volatility, again, we can see here that NGL is not significantly more volatile than the rest of US stocks over the past 3 months, and it's typically moving up or down 8% a week, and its weekly volatility has been stable over the past year. So it is slightly more volatile than the industry standards as well as the average market volatility. Right, but it's been stable. Its volatility has been relatively stable. Now, we spoke about the 7-day returns of 6.3% and the 1-year returns of 156%. It's definitely crushed and exceeded the U.S. oil and gas industry. So the returns versus the industry are amazing, as well as the returns versus the market are amazing. Again, I can see why a lot of people might be interested in this stock. Now, when you dive a little bit deeper, okay, and you look at the price to sales ratio versus the fair ratio, it is a good value based on its price to sales ratio of 0.1x compared to the estimated fair price to sales ratio of 0.3x. Okay, so that's basically where we're at right here, and it's actually below 0.1x. It's at 0.06x. All right, and we'll go ahead and dive a little bit deeper. And when you look at the valuation score on it on Simply Wall Street, it gets a whopping 5 out of 6. So we're going to dive into it. You can see the snowflake chart here. Value is really where this company is exceeding, as well as financial health. Those are the two areas of interest, and the two areas that really that this stock is doing well when it comes to the snowflake chart, right? We can see its health, its financial health, and the value are what is attractive to the stock right now. When you look at the price to sales ratio versus its peers, it's at 0.06 and the peer average is about 2.3. So it is a good value based on its price to sales ratio compared to the peer average of 2.3x, right? When you take a look at that, and you can see that it's trading much below lots of those. So, maybe these are some of the things that Nancy Pelosi is seeing, right? Maybe you know how Nancy Pelosi likes to do. She likes to invest in things and then get some bills passed in the in the government that tend to benefit the stocks that she's in. So maybe there's some interesting news that will come out over the next coming months, regarding something that may benefit NGL. Now, when you look at the share price versus its fair value, it's currently at a 79.8% undervalued, right? With a fair value of just above $20 per share. All right. And for that estimate, they're using a discounted cash flow model, and it's trading below those estimates of the fair value. And it's also trading, significantly below that fair value, at 79.8%. So there is lots of upside potential here based on the discounted cash flow model that they're using. Again, all of that information was just provided by Simply Wall Street. They've got an amazing app. They've got an amazing website, super easy to use. Definitely recommend them. Again, you can get a 14-day free trial using the links down below, and also up to 40% off for the first 100 people that join. Now, when we look at the chart, there are some key areas of liquidity, right? And we're actually being drawn towards our first key area of liquidity currently right now. Okay, so we can see over here that this, that we had some buy liquidity here and pushed price up higher, and then we came back down. All right, and ultimately this zone here ended up turning into an area of sell liquidity where we pushed lower, right? Each time we entered that area, and we're back into this area. So it makes sense that the stock is pushing up to an area of liquidity, right? And now we're going to see what the imbalance is going to be. Is there going to be a supply imbalance, which is just an imbalance of sell orders that pushes price lower? Or are we going to be able to consolidate or potentially break through here and create a demand imbalance where we see more buy orders than sell orders in this zone, right? In this area of liquidity, right? These areas of liquidity are very important because they're really the stepping stones to get to further areas. Now, we also have a small area of liquidity up here that, initially when we were breaking through these zones, we established this area, put in a double top, and we saw some moves to the downside. So these are going to be some of the key areas of liquidity, okay, right in through these areas here, that I'm really paying attention to. Something that I do like to see in stocks is, a nice rounded bottom, right? A rounded top, right, is signs of a topping, is, basically a topping signal. You can see over here, little rounded top, and we head lower in the stock. When you zoom out on the macro, like we've done kind of here, it appears that we're trying to put a bottom in on this stock over the much larger picture. And even here recently, we had a nice little bottoming signal here, and we're getting a nice wave 3 up, which is going to bring us into our Elliott wave structure, right? Markets tend to move in 3-wave and 5-wave structures if you're not familiar. And so, right now we're looking for a larger wave 3, which is going to be the C up here. So we've got a larger A up, B down, and C up. Okay. And this is going to take us to our price targets here of about 475 to about 540. All right. Those are going to be the target areas. And if you look, the Elliott wave is also lining up with that area of liquidity. So once we break through this supply zone here, there's a very strong chance we're going to be drawn up to that 475 to about 540 area. We're also aligning very well with the Fibonacci fans right now. That's what those trend lines are. And we are topping out on our Fibonacci fan right here. So it would make sense to see a little bit of a pullback sometime in the near future. And it appears that we got our wave 3 of the smaller 5-wave structure for the larger wave 3. Okay, so to break things down, 3-wave and 5-wave structures. That's how markets tend to move. An ABC, a 1, 2, 3 is typically known as a correction wave. Okay. And then your 5-wave structures, your 1, 2, 3, 4, 5s, those are going to be your impulsive moves, right? And so wave 1 is going to be impulsive. So you should look for a 5-wave count. Wave 2, right, is going to be corrective. So you're going to look for an ABC correction. And then wave 3 here is going to be impulsive again. So to summarize that, the A right here is going to be a 1, the B right here is going to be a 2, and the C right here is going to be a 3. So A and C right here should be 5-wave impulsive moves. Now, if we take a look, we got a 1, 2, 3, 4, 5. Right. And we came up, and after we hit that 5-wave structure, we had a move down, and then we saw a big bounce in the stock in these 2 days, and then we moved down again. But what's really significant is we held our 50% retracement level on the fibs. Okay. The reason you use the fibs is to identify trend continuation or trend reversals, because nothing moves in a straight line up and nothing moves in a straight line down. Right? You're going to get a move up, retracement, continuation of the trend, or a move down, retracement, continuation of the trend. And here we very clearly got a 1 up. We retraced to our major retracement level here at the 50%. That's where we found support. And now we've pushed up higher, made new highs for our wave 3, and wave 3 could extend further up to the top of the supply zone here, right around 450. But being that this is an area of liquidity, and we're looking for another 1, 2, 3, 4, 5 to take us up to our bullish price targets at that 475 area to potentially 540, we would be expecting some type of a pullback in the near term future. Okay. Now, this wave 3 can extend more. Okay. Wave 3s are typically the largest of your waves, right? And that's where you're going to see the biggest move and the biggest push. So, this thing does have room to continue going. And if it wanted to, it could head up to that second area of liquidity right around $5 before we see a wave 4 pullback. Now, given our most recent lows and our most recent highs, right? So you see here, we had the 1 up, the 2 down, okay? And we bounced off of our fibs after we established the swing low and the swing high. We now have a new swing low for our next move up to figure out where the retracement levels could be for our wave 4, okay, to get, the rest of the 5-wave structure up. So right now, based on the current highs, right, if we move higher, these levels are going to tick up a little bit higher as well. But if we do get a pullback, okay, the key areas of support that we need to hold are going to be right around 352, 331, and 309. Those are going to be your key areas of interest, right? And you can see here, if we were to get a pullback and bounce off of our Fibonacci fan trend line, that would be right along the 50% retracement level, which is ultimately what we did last time over here. We bounced off of our 50% level. Okay, that's going to be around 331, again 352 and 309. Now the reason I use these 3 levels specifically, the 61.8, 50%, and 38.2, is these are the 3 most common and well respected Fibonacci levels. Believe it or not, I like to actually keep my charts clear and not too cluttered. I have all of this on the chart because I can kind of look at the screen and see the 5 waves and 3 waves without really having to draw it up. And this is more of just for the purposes of you guys to try to visualize what it is versus me just telling you, and then you're not really following along. So hopefully you guys are following along. One reason that I do think that, again, we could be seeing a little bit of a retracement here, aka a pullback, is because we're again back at these overbought conditions on the RSI. Now, just because something is overbought does not mean it can't go higher. Look at how overbought we were over here, right? And sure enough, we did get a pullback, but look at what we did. We went higher, right? So just because something's overbought doesn't mean it can't go higher. This is the daily time frame. So, if you would have sold at these positions and checked on it a week or two later, you would have been pretty upset seeing that the stock went up massively from 288 all the way up to about $4. Right, you would have had a bad case of FOMO there and potentially bought in right here, which again is at overbought conditions. And then you see each time that we're overbought, we do get a pullback. Okay, so the general rule of thumb is you typically don't want to buy something when it's overbought. Now, again, that doesn't. I just want to emphasize it doesn't mean something can't go higher, but the likelihood of a pullback is much more increased when you're at those overbought conditions. So when we look at where we're at now, we're looking for a wave 3 to start topping up here. All right, over here we had our wave 3, we were overbought, we got a pullback. Over here we hit our wave 5, we're looking for an ABC correction, and we were overbought, and sure enough we got that pullback. Right, so over here we can see again we're in that area of liquidity, that sell side liquidity, that supply zone now. All right, we're at overbought conditions, right, and we're looking for a wave 4 pullback sometime in the near future. So all of these things are just to try to, not only go over the fundamentals, but I do a lot of technical analysis. I'm mostly a trader. All right. And these are some of the things that I use. Hopefully you guys enjoyed this video. Appreciated it. Make sure to smash that like button, subscribe to the channel. Real quick, we're going to go over where this stock could really go if it really wants to extend. Remember, I said wave 3 is usually the largest wave. And so when we look at the larger picture, right, we have the wave 1 up, the wave 2 down, and we could head all the way up to 727 if we really wanted to hit and get a massive wave 3 on this larger macro structure right here. 1, 2, 3 could extend all the way up to the 1.618 here, right around 727. But in a much more immediate term sense, the wave 3 should at least take us up to 475 or 540. But not before we have a little bit of work to do with these two areas of liquidity here. Those are going to be some supply zones that we really need to break through. So hopefully you guys enjoyed today's video. If you did, smash that like button, subscribe to the channel for more, and I'm out.